Okay, folks, welcome to Swing Trading today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time, the 7th of January. Well, it's official. We have a potato for president. It's over, it's in the books. He is not the most powerful man in America right now. That will fall to Chuck Schumer, who was actually my senator, and he will be extremely powerful. He is supported by the Wall Street lobby, whatever there is left of Wall Street. When I say Wall Street, I mean it as a euphemism. Here he is down here. I ran into him one time. I was at the Palm Restaurant out in East Hampton, and I heard a voice amongst a large table of people. And this is a tall guy, very tall guy, and he's very jovial. He was definitely the life of the party. When he stood up, I was amazed with his height, a lot of presence. But this will be the most powerful man. Here's McConnell, the Republican cuck who lost the election for Georgia, outmaneuvered completely. But here we are. All right, it's over. Full steam potato, and expect a lot of shenanigans from other powers. I want to say something about this lady who was killed yesterday, Ashley Babbitt. I mean, how sad. God bless, many prayers. Very pretty lady. 14-year Air Force veteran. Absolutely horrible. And God bless her and her family. All right, so let's get to it. Good morning, Sam. So, Jeff Gonlach put out a tweet. Not that it's a wise tweet, but it's a tweet that I agree with. U.S. economy should be strong, and he purposely puts it in air quotes, accurately. In the first half of 2021, money sent all across the country by Treasury Department, loaned by Fed, will likely increase. Lots of that gets spent boosting nominal GDP, but that is not production. So, what Jeff Gonlach is sharing with us, he's giving us this. Normally, in an economy where interest rates are rising, it's a sign of economic growth. It's a sign that the markets, the Federal Reserve, they're putting the brakes on growth because things are getting too hot too quickly. The organically growing economy needs to slow down before it overheats and inflation takes off. They're not going to, or at least they're going to try to not allow that to happen. They're going to try to stifle these interest rates. They're doing it. $120 billion a month of purchases by the Federal Reserve. Yet, what's going on with yields this week? We are at the highs not seen since March of last year. Despite the efforts of the Federal Reserve, yields are going higher. And it's not because of organic growth. Nothing could be further from the truth. People don't want our debt. Sovereigns don't want our debt. Take a look at what happened yesterday with the TLT. Where is it? Invesco. Here we go. So we were talking about this on market. Before I begin any further, I'll come back to TLT. Today, as you're well aware, is Thursday. Yes, Sam, I did see that. I did see that. And now the delisting other Chinese stocks as well, application stocks. I did see that. Thank you. Thursday night stock charts live, 6 p.m. Eastern Standard Time. There's a link below. Enter your email address to get notified just prior to us going live. 15 minutes, 30 minutes prior to us going live. If you're already on our email list, don't re-enter your email address. You're already going to get alerted. So, okay, back to, I'm sipping coffee here. Back to the TLT. So, bonds, the TLT, which is a 20-year bond ETF, broke out on the 30th of December. Follow through on the 31st. We pulled back on the January the 4th, 5th, failure, breakout point failure, bull trap, call it cupcakes, doesn't matter, bearish stuff. Yesterday, gap down. Good morning, Roop. Now what we're looking for is to see whether or not prior resistance from back here, actually support here, will now act as support. The stochastics, horribly weak. RSI, horribly weak. So it looks as though, and we've been warning about this. You can go back months on my videos, in particular Thursday night stock charts live. I've been warning. Beware of rising yields. The charts are firming up. And here we are breaking out multi-month highs. Economic data coming out today. Look at the ADP report from yesterday. Wow. A horrible miss. A horrible miss. And that's why you saw stocks move up higher. But think about it. Yields moved up higher as well. You would have thought yields would have pulled back, but they didn't. Purchasing Manager Index. Any number above 50 is a sign of expansion. So while we missed, we are still expanding. Factory orders beat by 2 bips. FOMC meeting, not much to speak of. There was some chatter there about taper. I don't believe for a second that they were ready to taper or that they're anywhere near tapering. A taper right now at the size of the bubble as is, and tapering, for those not familiar, means that the roll-off of debt. Right now, the Federal Reserve is buying $121 billion per month worth of debt, trying to keep interest rates no longer at historic lows, but in check. Now they're fighting the bond market, trying to keep yields down. So that number is only going to increase. If they try to taper, meaning sell debt off of their balance sheet, look out below for this market. Even if they stopped buying, look out below for this market. All right, so today we have initial jobs claims. That's a weekly number, but important. Prior to the pandemic, it was not that important. It was always at around 200,000 jobs per week. We're still about 4 times that number. More Fed heads out today. Tomorrow is what I like to call the Pimp Mac Daddy of them all, and that's non-farm payrolls. keep an eye on this number, but also keep an eye on this number. Average hourly earnings. We're seeing inflation in agriculture. We're seeing inflation in many areas. If you begin to see it in average hourly earnings, that's a problem, a major problem. Let's go to the pre-market futures. I want to begin with the NASDAQ 100. They closed down yesterday despite the fact that all the other major averages closed up. A lot of relative weakness on the NASDAQ. Given the weakness, I would be very careful with opening up any trades in the names, especially Microsoft, which really had a bad day yesterday. On the Qs, I mean, NVIDIA hammered yesterday. So I'm not loving this chart. You could see that we had broken down here on the 4th. This is a 4-hour chart. We broke down. We've rallied back, rejected, rallied back, rejected. So take our crayon out. Let's turn this green. And we are hanging on by a very thin thread. I'm going to set me up an alert. We have a bit of support here. I want to know if we start falling apart on, this is for all intents and purposes the Qs. Okay. Let's stick with equities for a minute. The Russell 2000, which had a monster day yesterday, is up yet again today. I got to say, you know, I'm carrying a short position here on the Russell 2000, but I'm not going to speak my book. The chart looks pretty good. I would not go adding more to that trade right now. I'm still confident in it, but I'm not delusional, because what we did here is a very powerful event in that we rallied, pierced the third standard deviation Bollinger Band. A couple of things can happen when that occurs. You could either get a reaction to the downside, which is obviously a bit bearish, and we did. We got a reaction to the downside. But net, what we've done here is we've just traded sideways, alleviating that overbought condition. I would love to say this is going to crash, but I can't say that. It looks as though we are going to move up higher. So, net, Russell 2000 still looking good. The S&P 500, huge day yesterday. Not huge day, good day yesterday. Very similar to the, in terms of formation, very similar to the small caps in that we're consolidating here. And that there's a probability of a continuation move higher. And my comments right now are only how we appear poised to open the day, right? And it's key when I'm speaking during these morning sessions. In the back of my mind, I don't care where we trade intraday. What matters is how we close. So, while we're looking good right now, it doesn't necessarily mean that we're going to close up on the day. It's implying that we're going to open the day up strong. Let's move over to the dollar. The dollar is breaking out this morning on a 4-hour time frame. Still very bearish on a daily chart. I mean, this is pretty bearish stuff. Let's see if they update. I'm sure they did by now. Updated the U.S. dollar. When I went over Market Wrap last night, they hadn't updated, meaning StockCharts.com didn't update the U.S. dollar on a daily time frame, so I used the UUP, which is a dollar bull ETF. Yeah, it's not as bad as the dollar bull ETF. We did show there's been a divergence lately between the UUP and the dollar Dixie index. Case in point, UUP on 4th showed as up on the day, closing up on the day. The Dixie shows as down. Yesterday, Dixie closed up, UUP shows as down. So I'm not sure what's going on there. Here's the UUP, and you can see that it's showing is closing down. So very strange happenings here. I've never seen this before with the dollar bull ETF versus Dixie. Were it simply to go by the dollar bull ETF, it looks pretty bearish. That being said, the dollar Dixie closing price action doesn't look as bearish, doesn't look great, but it looks as though the dollar is going to press a bit higher here. So with that in mind, we want to take a look at, good morning. In OVG, good morning. Would you do potty chat? What is that? I've never heard of that. Or am I walking into something here? All right. That's funny. All right, let's stick with commodities for a second. Gold was higher, fading a bit. We had a covered call position on the GDXJ. I was worried about the dollar breaking down further and gold and the miners rallying along with Bitcoin. So I closed out that position. I booked profit. We made a 43% profit on that. But gold is not looking that great today. And that's because the dollar is rallying. Let's check out silver. Can you get that one? Possible lower high here on silver. We're up a half percentage point, but we have clear resistance here. And the dollar's price action is not going to help. Let's check out ag. Looks like all these commodities are weak. Soybeans coming in. Oats coming in. Rough day yesterday. All right. Natural gas. Taking a pause. Earl. Oil is moving up. Wow. Big day in oil. Looking good. Okay, let's do some chart requests. All right, we're going to use our friends over at TrendSpider. Bear with me 1 second. Just trying to figure out what our members want. I'm going to the members area. All right, good. Okay, folks, TrendSpider is one of our sponsors. Don't settle for ordinary trading software. Take advantage of this scanning, charts, analysis, automation, backtesting, monitoring, alerts, insights. I mean, it's nuts, all the functionality that you have here. You need to automate your grunt work. Cast a wide net, but to cast a wide net scanning for stocks, you need a tool that is going to allow you to be efficient with your time. So speed up your analysis, improve your accuracy, and reduce costly mistakes by taking advantage of TrendSpider. Get those winning setups and time your trades with precision. I use their alerts to do that. So there's a 35% discount code below. Take advantage of it. Use the link to send you over there. And use this as another arrow in your toolbox. I use it for my spell check for technical analysis. So let's bring up OPTT. I went over this one yesterday, I believe. I did a video on it. It's on YouTube. I think it's one of the leading videos on YouTube for OPTT. And we're going to go with a monthly chart first. I did the video back here. I said it was overbought. It's going to come in. Sure enough, it's come in. What we're doing is, let's go to a weekly chart. This is too... Yeah, this is better. All right. Let's see if this helps at all. Yeah. Took log off. All right. So we had our alert fire off yesterday. I remembered hitting. I'm not ready yet to go pulling the trigger here. I think that we're very close to being able to nibble on the trade. But we closed at the lows of the day yesterday, which I didn't love. I didn't love the price action on a daily time frame. We had an outside reversal bar. This is a daily chart now. It still respected the support level that we identified. But given this candlestick, when you see this candlestick, it normally doesn't come in ones. An outside reversal bar usually comes in threes, fours. So while this could be a one-day event, and I'm rather surprised that it flashed this price action, given the fact that the probability of a Biden administration was so high. I mean, 99.9999999% chance, yet this stock took it on the chin, being a renewable energy stock. So perhaps it's a one-day event. I would wait, though. I would like to see a pullback then a reversal to close back above the support level by the end of the day. Where do I have an example of that? We'll use this formation here. I have a video series below. There's a link to it in the video description area, whether you're watching this on the blog or on YouTube. It's my 5 most powerful candlesticks. This is a bullish key reversal bar. I'd be looking for that candlestick here. The however is we trade intraday down below the support level, only to reverse to close above it. That's what I'm looking for on OPTT. So right now, I'd wait, see how it closes on the day. I don't see a rush, I don't see a need to rush in here at current. I like it longer term. I just don't like the daily price action. Outside reversal bar, again, they rarely come in ones. Next chart up is Mr. Softy. I'm only going to do 2 more here. I have a lot to do today. Microsoft's in trouble. We may get a reversal here. This is like a hammer formation. We may get a counter trend rally back, especially with the Tues up this morning. But I think Microsoft is in all sorts of trouble. Let's go pull back to a monthly time frame. We had broken out in December above this resistance level. At one point in time, it was support, then it became resistance. That ended. We broke down. And you're welcome. It broke down this month. And I'm not going to do it right now. Maybe I'll do it tonight if it's requested. But the quarterly, yearly time frame, RSI, extremely overbought. Quarterly is still near 90. Yearly is well over 90 on RSI. So to me, it's somewhat of a bubble. Let's drill down to a weekly chart. Let's take these off first. And using the automated trend lines, I mean, there are support levels below here, such as at 198, 199. But this is the pimp Mac Daddy of them all. Way down here at 147 per share. So if this goes, there's a lot of air between where we're trading, or I should say where there is initial support here and down at this level. So this is the value of having the automated trend lines. Click of a button. Weekly chart. Now in a weekly time frame, not looking pretty. So we have support. Let's bring this down a little bit. We have support at around 208.69 to right at the bottom of this volume show at 205.66. If that breaks, we're going to see a one handle. Oh, thank you very much for the super chat, Nova G. Thank you very much. Appreciate that. Help support the channel. Thank you. So beware here with Microsoft. I've been warning about it for a while. I've been wanting to short it. I'm not ready to short it quite yet, despite the fact it's shown such weakness, because I think we're going to get a rally back. And what we're looking for is a rally, then a lower high. Once I see that topping action and the failure to break out to new higher highs, if in case that happens, maybe we'll go into $1,000 per share. Technical analysis is not a crystal ball. It just helps you improve your probabilities of success. If I see a failure set up, I would open up a short position. I would then get very, very aggressive to the short side if, in fact, we take out prior lows. So we are pulling back at current. We rally, lower high. If we get that, open up a position. Add to that position on a breakdown to a new lower low. That would be a confirmation breakdown on Microsoft. And this is the largest component of the triple Qs. So beware of the Qs. They were very weak yesterday. They underperformed by a mile. These are the names, these are the stay-at-home names that led us out of the April lows. And with that, folks, I'm going to say again, thank you very much for the super chat in over G. Hopefully I'm saying that right. Everybody have a very profitable day, and I will talk to you soon. Be well.